Welcome to FX Street. Today we're going to be talking about Polygon price at risk of getting a rejection, which could trigger a drop back below 50 cents. But before we dive deeper into the technicals of Polygon, please make sure to subscribe to our YouTube channel and follow us on Twitter at FX Street Crypto to be updated on the hottest trends in the cryptocurrency space. Let's zoom in a little bit on MATIC price action, and I want to first of all, it's always good to do a little bit of history lesson. So 55-day moving average, firm rejection with this, although it was a bullish inverted hammer, could have been normally a good one to see a continuation, but clearly not strong enough. Bears were there to defend the 55 and pushed price all the way back. And since then, although bulls here, a bit painful that they had a flat top here on the close, and of course bears were keen on the day after with that small blip higher to quickly get in there and defend the $1.18, which triggered then the descent. Then we had here a failed rejection yet again, and that pushed price action even further to the downside. Again, not a coincidence, certainly this move here, which coincides with the dollar strength that we have seen throughout May. A little bit sideways past few days, and yesterday, although a very broad risk on with stock markets rallying and certainly in the forex space there were big moves over 1 and 1.5, even some currencies rallying 2%. But that seems to be fading today as again markets are focusing on more bearish elements. Certainly the inflation has been put back on number one in the agenda after the comments from Fed Chair Powell yesterday evening. And don't forget, in Asia, and that was a headline that didn't got picked up yesterday by the mainstream media, but not Shanghai, which is opening up at the moment, but Beijing is set to be on lockdown in the next coming days and weeks as more and more regions in the city are closing down blocks for a full week or even 2 weeks of quarantine. So that's something that still needs to be picked up. So could be that more supply chain issues on the rise. Don't forget, for example, on the inflation carry as well, we have India banning wheat exports. So again, another additional force that could see prices rise and making inflation rise, which then means more hawkish central banks, which means investors on edge, refraining on investing in risk assets, etc., etc. It becomes a little bit of a continuous loop in that chain reaction. So here, although we didn't even get to make it, the rejection against the red descending trend line, even before then, bears are already at it, bulls are forfeiting on their positions, and that could spell that this profit from yesterday is completely erased. Drop back towards this pivotal level here, which is already then 15%, and if we dip even lower, could well be that if another catalyst gets joined, we see a retest of this low at 48 cents, which means that then we slip back below 50 cents. To the upside, we would need to see a fierce bullish move, strong enough to shoot through this trend line, and then it could rally all the way up to 96, maybe even $1. But for that, we would need to see a very, very positive bullish element. For example, a peace breakthrough in Ukraine and Russia, or suddenly inflation in the US dropping massively, which then means that the Fed doesn't have to do anything anymore, something like that. But for now, too much bearish elements in the tail risk that are dragging on price action and will keep it muted to the downside. That's it for Polygon for today. Please remember to subscribe to our YouTube channel and follow us on Twitter at FX Street Crypto.